Hello, everybody. Happy Sunday. It's Q&A time. Today, we're going to talk, well, first of all, it's going to be an extremely technical video covering all the top topics from you all this week. And we're going to get into a lot of TA. And the big theme is when to get in, when to get out, when to rotate, when to cover. These are the questions that are on top of your minds. So let's get into it. Good to see Sean Donnelly, KA, TNT Tesla, everybody here. So let's see. I got to turn me off. Boom. When to get out. Also, when to get in, when to rotate, when to buy that castle, all that good stuff. And thank you all for coming. And not financial advice, just a guy on the internet. But I can promise you one thing. Nowhere on the internet will you find this level of content. Not even close. Saluti, Sylvan. Thank you for coming. We have people from Switzerland watching, and all these questions come from Patreon. They do not come from me. But I love doing this because when it forces me to do 48 hours of work with a team, and I get smarter as a result. So I love that. First question from Licorice Salad. Love your work, James. My girlfriend and I have bags of Sol, Bitcoin, Tesla, Sol being our best performer so far. And we saved up 20% for our house deposit. But with these crazy market opportunities, we're torn. Keep renting and pump that cash into more Tesla Bitcoin, or buy the castle you always talk about. Are these once-in-a-lifetime shots worth it over home ownership right now? Super interesting. In fact, one of my rules du jour yesterday or the day before talked about this, about the opportunity cost sometimes of taking money to buy a house and exiting a position. So we'll get into that. Let's look at a bunch of technical things. But before I go forward, remember, you're doing something very special. You said your girlfriend and you invest together. And I always say the family that invests together stays together. So keep up that good work. Let's look at a couple of charts. This is Bitcoin on the ATR model. Level 5. Interesting. Interesting indeed. So that means we're kind of hot. Let's look at Solana on the ATR level. Level 2. We're going to talk a bit about profit taking as well and the impact of going to the moon and back. It is startling. What's also startling about this chart is that red shadow is the old bear market and how we were at 259 back in 2021, how we went to 295 in 2024, and how we're back literally lower end of the zone, level 2. Absolutely unbelievable ride. Then we have Tesla is lukewarm. It's kind of level 3.5, slightly above where Solana is. So when I look at all of these and I look at mean reversion, I think, what would I do? I don't know if I would sell Solana. You could take some off of Bitcoin. And I also don't know if I would sell Tesla because I believe Tesla will outperform Bitcoin coming into the next, say, 12 months. Pretty sure of that. We'll see if I'm right or wrong. Again, the internet doesn't lie. These videos will always be there, so you can always come back and check me. But the most important thing right now is this. This is unusual. This is the Case Shiller on the ATR model, which I've never put real estate on the ATR before. But something really weird cropped up. And again, I never saw this before. In the history, since the year 2000, there have only been 6 red sell flags, and we just got one on real estate in the US. But normally, because of money printing and debasement, hard assets go up. So when you see a dip in real estate, it tends to be very short-lived. And I could talk for hours about this chart. I should have put it on a log for it to show up clearer. But look at all those little dips that happened between, say, 2004 and 2008, dip, and then rampage. And this is very much correlated with money printing. Of course, we had the global financial crisis, the big yellow dip there. Things were nasty. Banks were destroyed. There was no money to buy real estate. There was nobody lending to buy real estate, etc. And we're in pretty much the same situation right now because mortgages are too high to afford homes. And because of money printing, the home values are still high. They haven't fallen down. But they are taking ever so slight a dip here on the ATR model. So I say, hold tight right now, not financial advice. If you come across a castle that is an extremely good deal and you can afford it and it's well under market value, And if it's the cheapest house on the block, yada, and there's everything you want. That's your dream. You know, you want, say, the pool, you want the big garden, you want the 5 acres, you want the whatever it is, the setting, the color, the south facing front door, the deck. You know, you got to have your checklist of 20 things you want in a property. If it does check all those boxes, then go for it. Otherwise, hold tight right now. Wait till the mortgage rates to come down. There's also another technical indicator here. This is US pending home sales. Pretty frightening chart. And you can see home sales have slipped already over 7% year over year in Feb. And if this trend looks like it's going to continue to worsen, and I think you have time to get into real estate, as I covered in yesterday's video, money printing is happening. Assets will go up, but there's a lag. I think crypto will kick in hopefully sometime in May. So we have a month to go for that. And then take your profits in crypto sometime summer 2025. And then look for real estate. And by the way, the best deals on real estate can always be scored between Thanksgiving and end of January. So we're coming into springtime, but there is a lid on real estate because of the high mortgage rates, which have to come down, and they will come down, but it's going to take some time. That won't happen until June probably of this year. Anyway, that's the way I would play it, not financial advice, just looking at the charts. And if you had to take some, I'd probably take a little bit off of Bitcoin because that has done well. And I do believe the alts could still rebound. I don't think all season is dead, despite what you read on Twitter. Okay, next question is from Shabazz. I want to take a moment to thank you for your incredible impact. Thank you, my pleasure. Hard work, dedication, and passion don't go unnoticed. Good. And I work every day to be a good poster child, to motivate people to work hard, because when you work hard, great things happen, everybody. I could sit on the beach. So good, Elon Musk, but that's not what people do. Anyway, in how to retire on Solana, this question is really very both poignant and pertinent as well. You mentioned that holding 308 Sol would be enough to retire in Canada. Hopefully that's the case if things happen. Again, everything can go to zero. Remember that, everybody. But in how to prepare for the bear, you advise selling at least 40% of holdings when a bear market hits. I currently hold 330 Sol. Should I sell 40% in chunks using the IA profit-taking model and then work on rebuilding my holdings to maintain at least 308 Sol in my portfolio? As you say, never go broke taking profits. So I'm all ears. This is brilliant. And this is also pertinent because we're going to show some things now that are very alarming. Very alarming. So let's imagine this is all the default settings on the profit-taking model. I just fired it up, clicked on Solana, entered the number of Solana you have, 330, and I put exit aggression to high. What's most profound about this is every single layer hit on the profit-taking model, all the way up to level 10. Boom, 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 hit every single one. And I was quite frankly stunned about that. I thought that a few months ago, but I've completely forgot. Anyway, you always configure it by anchoring at the 200-day moving average, where the price goes through the 200-day, and we hit level 10, which is crazy. But it gets crazier too. This assumes, okay, I assumed a couple of things. You got 330 Sol. Your cost basis is 18 with staking, same as mine. If you followed me in the channel, that's probably what your cost basis is. And exit aggression flipped to high. Now, what's really crazy is this. You would have sold $63,000 worth of Sol, about 320 so far. And here you see the layers where you took most profits. And all of the data is there. The units sold, units held, value sold, value held, total balance, opportunity cost, and cumulative expected value. So this is kind of crazy. You would have sold nearly all of your Solana, but it gets better. It gets really better, okay? You would have had, say, 20 left, I think, 30 left. I don't know what the exact number was. But today, now, with that same money that you took, assuming you don't pay any taxes, you could buy 504 Solana with your 63K. So what you could do is ride all the way up and then wait, maybe re-enter again. By the way, this is over long periods of time. You can see the big double top there. And re-enter when you re-pierce layers, depending on your taxes, or sit it out to see if things really turn around. So right now, we are waiting for the optimized trend to turn around. Right now, what's crazy is Solana's at 125. It was at nearly 300, and it's come all the way back. This is why this is a funny meme, and it's Rule 57. Welcome back, Diamond Hands. How was the moon? Okay, we wrote this all the way up, all the way down, which is kind of sad. And because of my tax situation, I'm kind of boxed in, but I will be taking some off the table, depending on what my other assets do, because I do believe in having certain allocations. Right now, my Sol position and Bitcoin position are very, very small compared to other positions like MicroStrategy. Now, the craziest thing as well, you have to take into account, say, capital gains tax. We have the Patreon tax calculator for capital gains, which determines exactly what your reentry should be. So I ran the numbers for you. I assumed your cost basis is 18, the amount held, etc., the amount sold, the average price, which I calculated as well from this chart, calculate the average price of how much you sold your Solana for to calculate your taxes. Short-term capital gains, assuming it's 40%. I don't know what it is up in Canada. And long-term, 20%. Again, I don't know what it is up in Canada, but that's approximately correct for the United States. Might be a little bit high, might be a little bit low, but you can play with it yourself. But to re-enter based on long-term capital gains to be profitable again, after your average sales price of 197 is 161, and the short-term capital gains re-entry is 125, which coincidentally is exactly where we are now. But I know you're probably in more than a year, so your long-term capital gains. So you could buy now at 120, 125 and ride it back up again. If we had adhered, including myself, I did not adhere to the profit-taking model that we built here because profit-taking is hard, but I felt there was more bull run to go. I didn't expect such a drawback, and that's my bad. Again, we make mistakes every single bull run. We should be prepared, better prepared, but it's difficult because of taxes. If I was tax-free, I would be ruthless. If you're tax-free, be ruthless. Take profits like a mad person. Anyhow, that's the story. And let me see. For some reason, this thing keeps... I wish I could shut off my thing. Anyway, hope that helps. This is from Shanzi. Hello, James. Regarding your Bitcoin mining plan to exit these stocks when they get higher in value, will that involve marathon mining or is it a position akin to strategy? Thank you. So there is a plan is to exit the miners. Again, that's another classic example. If I had adhered to my profit-taking model last year, but I couldn't because of tax reasons, I would have exited a lot. Instead, I hedged. I hedged things like CleanSpark at $20, but it wasn't enough to protect myself to the downside. Now we're like at $8 or $9. It's crazy. And as I always say, mining is a cut-through business. Never have more than 5% allocation to miners. I'm currently 1.5, 1.6% allocated to miners, partly because everything else has gone up and they've shrunk. Anyhow, that's the nature of the business. Remember, cutthroat strategy. There is something weird with marathon mining. I'll turn my little thing off. It's not gaining on the NAV premium front at all. NAV premium right now for marathon is 1.11. You look at MicroStrategy, it's 1.81. So this is part of the difference between a pure play and a not a pure play proxy. Okay. Marathon have a very large mining business. They mine 600 to 700 Bitcoin a month. But with that comes a lot of overhead, working capital, those types of needs. And the market's not valuing it for that. So what would I do? Would I hold like MicroStrategy? The answer is no, because there will only ever be one MicroStrategy. They have the first mover advantage. There will never, as long as I live, be a company that will be able to do what MicroStrategy has done. That's the beauty of being a first mover. So remember that. MicroStrategy is the one. There will be no others. Even if, your Warren Buffett wanted to go and try buy a bag, he wouldn't be able to, even though he has $300 billion, $330 billion, in fact. So that's the rule of the day. Let's move forward. This is from Dogs Wonder. I love that name. First post here and recent subscriber to Patreon. I've been watching your channel almost a year and stacking. I created a wonderful stack of Tesla, but last week I saw it running and sold calls 70% of my bag for 265 the call expiring on the 4th of April. And the other one, 30% of my bag, $275 call expiring on the 4th of April. I'm devastated and at a loss what I should do. Should I roll them out and up, or should I buy them back or let them expire in the money? This will be a significant tax event. So you're in actually pretty good shape per my analysis here. Let's look at the first tranche. Now, I assume because you said 30%, 7%, you got at least 10 calls sold. 7 of them are the 265 strikes for April 4th, which is not bad. And I assumed 3 of them is for the 275 strike. Now, mathematically, from where we stand right now, calculating the odds of winning, you have a 69% chance right now of winning on this trade, i.e., 69% chance given where we are today before April 4th, which is very early next week, that the price will close somewhere around 265. Now, the other one, the 275, you have a, try to read the number, I think it was 77% chance of winning on this trade. And I'm getting all sniffly. But be careful. There's some things you need to understand about where we are going next. And this is why I always say keep your head out the window. We are 260 right now. I don't know what things are going to do in after hours, but I did look at the futures and they were pretty scary. There is a monster futures dip happening that happened after the close. It's absolutely insane. This is from TKL, the Kabasi letter. And the S&P 500 lost $100 billion per trading hour for a total of $2 trillion. And then after the market closed on Friday, the S&P 500 raised another $120 billion in minutes. Okay? So what this means in clear text, the market will open down on Monday morning, tomorrow morning, which means you need to be prepared to cover. I don't know what you sold these options at. If I did, I'd tell you much more specifically what you should do. But if Tesla dips to say 250, 255, cover, buy them back. You might be able to buy them back at a profit because remember, the time value is expiring fast over the next 3 days. So that would be what I would do. But there's more. There is more. There's always more. This is the other thing to consider. We have a Confluence sell signal and the trend is down. So again, cover on a dip Monday or Tuesday. Watch the chart very carefully. Okay, the fundamental analysis tells you what to buy. The technical analysis tells you when to strike, whether that's roll up or cover or buy or sell, etc. So I do believe we should have a dip tomorrow. I do believe there's a lot of nerves as well in the near term about production. And a quick reminder too, I'll remind probably twice, Tuesday is the production report. We'll get more into that, but the chart is looking good for us to dip down to 250, 260 tomorrow. Also, remember everybody, April Fool's Day is April 1st. Today, I think, is the 30th of March. I don't know how many days were in March. I think 31 days in March. Yeah. So April Fool's Day is Tuesday. So Octa will be on Wednesday this week. This is my 4th annual 1st of April videos coming. So be prepared for that. Be prepared for a shocker. Also, Q1 production is for Tesla is April 2nd. Now, I believe based on experience, there's so much negativity out there in the marketplace. The analyst expectations here are about 351,893 cars. If we get above 350K, I think there will be a sigh of relief for the market. And Tesla could shoot up because, again, markets should be forward-looking. We have got the Cybercab coming in June, less than 12 weeks away. Bonkers. The new Model Y, global shift of production lines happened at the same time in Q1, which meant a lot of cars were not produced. A lot of cars were not sold. There was also the Osborne effect, where people delayed their purchase waiting for the new version. Now in 42 states in the United States, the Model Y, both versions are completely sold out. You can't get them. Now, sales dropped nearly 50% in some markets. Again, Model Y production shift, new lines all around the world caused this disruption. That's what happens when you change. You change what is the best car in the world to an even better car. There's got to be a little bit of short-term pain with that. Sometimes you got to take a little short-term pain for some long-term gain. Also, no doubt, the Doge effect is hitting some sales. But there's also a theory that it could be the actual opposite effect. No such thing as bad publicity. We'll wait and see. Cover. This is my non-financial advice. Cover tomorrow in a dip, or at the very latest before production numbers on the 2nd. Hope that helps, and you'll be fine, and then you won't incur your tax problem. Alrighty, next question is from EW. Like Ernst & Young, but with a W. Hi, James. Recently, you shared something about how over the last 2 years, the S&P 500 returned about 23% per year, but if the top 7 companies were removed, the fund would have only returned about 6% per year. It therefore seems logical that part of a good investment strategy would be to take money that would normally be allocated to the S&P 500 and instead allocated evenly to the Mag 7, leaving out the bottom 473. I think you mean 493 companies. But could you please give your analysis approach, identifying advantages and disadvantages, risks and benefits, et cetera, and the top 7 companies pretty much stay the same for 5 years at a time. Anyway, very good, very clever question. First of all, Mag 7. Why? Why does the Mag 7 do so well? Well, first of all, I always say that 40 to 60% of the S&P 500 are dinosaurs. These are businesses that will die. You got old retailers, you got the GameStops, etc. GameStop is now following the MicroStrategy playbook to try and survive. I tweeted something a week ago about how all these dinosaurs with very big cash balances should immediately run out and buy Bitcoin. It's their only chance to survive and hang on for a little bit longer, okay? Anyway, they're probably not going to do that because they're just kind of on a sinking ship, and it's hard to think about other new stuff when you're drowning. But that's what I believe. The disruption that's going to happen over the next 3 to 5 years is insane, and half of these companies are not ready for it. Also, the Mag 7, they're at the forefront of this massive narrative change, this massive secular trend, AI, digital transformation, renewable energy, all that stuff. Some of them have 4 of these narratives happening all at once. And these themes are not going away. They will persist. That's why they do well. That's why I believe they will continue to do well. Also, when you look at the S&P 500 Mag 7 share, you can see it's become very sizable. So even though there's only 7 companies, they make up 34% of the entire index, which is bonkers. And this is the actual, it's a new version of the slide that I shared before. I created just to show you how powerful it is. And I also involved, hey, DBF, Mag 7 2023, and then S&P 500 without the Mag 7 2023 and 2024, as well as the S&P 23 and 24. And it's so bizarre because the year 2023, the S&P 500 got 24% back, and the year 2024, the S&P 500 got 23% back. You cannot make these numbers up. It's bizarro. But the middle section is alarming. If you rip out the S&P 500, the top Mag 7 from them, and you look at the last 493 companies, they made 4% in 2023 and 6% in 2024, whereas the Mag 7 made 106% in 2023 and 64% in 2024. It is absolutely alarming. And that is simply because, as I say, well, you'll hear me say it in a minute. If anybody can guess, let me know. But this is also an interesting chart too. This is Mag 7 versus Bitcoin over the last 12 months. And remember, when we rewind the clock 12 months, it was like right at the time of the ETF or the halving. And since then, by the way, the Mag 7 are slightly winning. So here gold is winning, sorry. Gold is the Bitcoin versus the Mag 7 over the last 12 months. And the Mag 7 is not winning. Mag 7 is blue. So Bitcoin is still beating the Mag 7, even though the Mag 7 has this crazy performance. Slight error on the slide there. I got the colors confused. Anyhow, the other thing as well, my favorite saying is winner takes. If anybody can finish this sentence, drop a comment below. It's so important. And that's why there's a huge concentration. Not only follow the narratives, follow the winners. Okay. Ignore the rest. Excise the top 1%, and you'll do very well. So your strategy makes complete sense. It will continue. But remember, there are a couple of players in the Mag 7 that I personally wouldn't touch, one of them being Apple. I think Apple has run out of growth. The only reason the Apple stock is up is they keep spending billions of their cash on buying back shares. So watch for that too. Anyway, next question from Schoolboy Hart. Any chance you could do some modeling, price estimates, retire on, etc. for 2030 for NVIDIA? I've looked for good sources on this, and I can't find anyone that does your level of thorough work. Dan Ives and Tom Lee are very bullish, but just can't find deep analysis. Thanks for what you do. Well, I didn't do 2030 price predictions for NVIDIA, even though I have a position, but it's small compared to my other positions. And I don't have a history going back to 2017 of price prediction models for this asset. But I decided I'd make one for you. So again, I'm a little bit concerned about this because I do believe NVIDIA is the absolute leader in GPUs. They have 85 to 9% market share. The competition is sort of coming. AMD and a couple of players out of China are coming. But I do believe over time, GPUs could be commoditized. We shall see. We also have 10% of all the compute now running on Tesla is on what they call Dojo. They have their own GPU that's completely optimized for training. So Tesla could also be a competitor to NVIDIA. Just imagine Tesla nail what NVIDIA do or make it even better. That's automatically a $3 trillion market cap valuation for Tesla, just on that little side business, little side gig. And just think about that as well. Anyway, here are some numbers I ran. These are the key ratios and assumptions I used out to 2030. CAGR, compound annual growth rate. You watch the channel, you know what that is. 26.5%. Earnings per share, 750. PE range, 30 to 70. And I had a whole bunch of variations. Revenue target, 600 billion. Stock market cap, 8 trillion. 10 trillion, etc. Blah, 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 blah. Modified down. Price to sales ratio is a typo there, I see, but ignore that. I'll fix it later on Patreon. And annual revenue growth, 40% aggressive. I do believe $400, or at least, actually, coincidentally, the Lila model says 386 is achievable for NVIDIA, which is from where it is now low 100s. That's a 4x from here. Again, I don't know where this will go, but if it does do a 4x, the market cap will be 10 trillion plus by 2030. Again, we'll see if they continue to innovate, they continue to stay ahead, and the competition is most definitely coming all over the world. I've seen what this company can do, biggest company in the world, and they're in the middle of a narrative. But again, when people see that, they're going to try chase and replicate what they do. So at least $400 is my marker. Bookmark this and come back and we'll see. But again, everything can go to zero, everything can change. Remember that nothing is guaranteed when it comes to investing. Next question from AR09. I'm trying to build a position in Bitcoin and Tesla. I have 5K that I'm willing to invest every month. You always say that if you're patient and you're willing to go hard and there is a fire in the building, I don't know if I should invest all of the money I'm willing to spend every month or spend half of it and keep money waiting. I just don't know when it is time to go heavy. Tesla at 230 seems like a no-brainer. And I know you spent 1/10 of your cash position at 220. Whoops. Yep. Can you tell me how you would think about this? I already have the IA suite. Happy to use that. But it's also crazy how the Tesla on DCAS is always flashing 2x buys every week these days, even on buy less. Thank you. I'm 27, if that helps in decision making. Well, that's awesome. You're so young. That's fantastic. And the fact that you're doing this now and you understand all of this stuff means you're going to go very far over the next 23 years. By the time you're 50, you're going to be absolutely loaded. So congratulations on that. Love it when young people invest. Love it so much. Okay, let's get into, first of all, this is how I say timing is everything in the markets. And as we know, DCA wins on average, but blue wins if you can score those moments when things are completely oversold. So if you are not in a position to determine when things are completely oversold, just DCA. If you are with the tools you have, like IDSS, you can. So let's look at DCAS first. It is the safe way, but always keep on cash on hand for those glorious dips, as I call them. And mean reversion dips is when I deploy hard. We'll look at the chart that shows you this in a second. But this is DCAS, and it shows you what you could do with Tesla. over time. You'll see here the big red section there is what we call the squeeze. When there's a squeeze upwards, DCAS keeps you out of buying because it doesn't want to make you buy stuff that's expensive. DCAS is designed to, in a data science way, analyze when things are getting overheated, overinflated. You don't buy on those runs upwards. You wait for mean reversion. And as it mean reverts, then you start layering in slowly. And the more it mean reverts, the harder you get, because we ultimately know Tesla will go back to all-time highs, which is like 490, 495, $500, call it. The green above the line is kind of like bull market-y type situations. You nibble there. But now you can see the red is under the middle line, which means it's like a bear market situation, which means you layer in harder. That's why you're seeing a lot of 2x flags. Now, if you had used DCA versus DCAS, DCA, you'd have 420 shares. DCS, you'd have nearly 1,200 shares. You have 3x the number of shares. You would have spent 31,000, 32,000, whatever, 31.5 on DCA, and you would have spent 73K on DCAS. But your ROI is 250% versus 320%, which is a lot higher. So basically, you would have a $340,000 bag for 73K using DCAS. And yes, you would have bought a little bit more, but you'd have a lot more return on investment and a lot bigger bag too. DCA, you'd have a $126,000 bag for 32K. And that's the rough math of that. But the most important thing, though, is the question is when to lump sum versus DCA. And the answer is here. Okay. This is my Bible. And you'll notice when things happen on a big negative standard deviation hit, I deploy really hard. Like I'll do a tiny little DCA nibble, let's say 350, tiny. When I see something like this kill zone happen at 220, I do 50 times that size, 50 times the actual deployment. Remember that. People don't understand layers, but the more it falls, the harder you go. Nibble at 350 and you 50x that buy at 220. And the reason I do that is because of mean reversion. As you can see here, the $106 kill zone, that was a glorious time. I did something I never do then, and that is buying out of the money calls, which just converted, by the way. I was buying the $150 calls for nothing, and they just converted into stock. And that was years ago. That was late 2022. Then the $140 kill zone, you can see there, another glorious time. We actually had many times down in this lovely area, 160s to 140s, hit 135, I think, at one stage. Fantastic time. And then most recently, the 220 kill zone, right there in mean reversion. That's what we had last week or 10 days ago or so. That's what I use. And that is when I go hard into what I call the blues. This is when you lump sum. All right. So you have the tools, wait for those big mean reversion dips, say 2 standard deviations, 1.6 or so, and then you go hard. Okay. You take whatever cash you have and you deploy, and then get back to your DCA over time. And that way you bank most. So that's like DCAS on steroids squared when you add in the lump sum factor too. Hope that helps. Next question from Stock Titan. I know that you like Neptune Digital for exposure to SpaceX, Solana, and Bitcoin. I also know you are a huge believer in Tesla. I, like you, feel the same way, and I like the direction of both Tesla and SpaceX. In fact, I like most of all Elon's companies. There is one or two I don't know too much about, probably Boring Company, Neuralink. Yeah, they're very tricky. I don't know much about those either, and we can't buy them, so whatever. Anyway, my question is, have you thought about gaining exposure to SpaceX, Tesla, XAI, and X through other sources? I would like to get your thoughts on investing a small portion of resources into ARK, ARKVX, that's their venture fund. I know they hold shares of other bleeding edge companies as well. So this is kind of interesting because a lot has happened. I answered a question similar to this a couple of weeks ago, but let's revisit because I want to talk about capital allocators and what can happen so fast with a simple little case study that just came to fruition on Friday. First of all, XAI is up 25,350% since 2024. 25,000%, 25x, not bad. We've had more than that on things like MicroStrategy, but we'll put that aside for now. That's a special case. Now, this is on Hive, which is a place where you can sometimes buy blocks of shares. Those little dots are where you can buy blocks of shares, but they're not easy to get. The XAI people knew not to sell, so they didn't sell. Now, there is an absolute crazy level of synergy as well between X and XAI and why they just merged. And I won't go into it, but I'll say one thing. Nobody has the compute power that XAI does. Nobody can even pull off what they had, even if they're the GPUs. First of all. Second of all, X, it's the global town hall. You have 650 million people hitting that every single day, sharing news, alpha, research. Yeah, some is probably wrong. A lot is right. If you follow the right people, you will no longer need a Bloomberg terminal or Wall Street Journal or NZZ in Switzerland or anything like that, okay? Very important. This has changed everything. That's why media companies absolutely hate X. And the guy behind it, of course, too. But who would have thought stitching these two together in such a short window of time? Maybe was it a big master plan? Maybe was it accidental? Nothing is accidental, ladies and gentlemen. This is the insane value creation that I want to stress. And this is why I follow people with track records of being very, very, very good capital allocators. People turning nothing into something in a very short window of time. So X recovery from 9 billion, Fidelity's low price for Twitter, to 33 billion, which is a $24 billion gain in 18 months. Yeah. Remember, Elon was forced to buy X by a judge in Delaware. He was forced to. He didn't want to buy at 44 billion. They made him do it. Okay. Then XAI's explosion, $130 million valuation, 21 months ago. Okay, to 80 billion today. 130 to 80 billion. Total value created about 48 billion in less than 2 years. That is absolutely insane. This is why you follow these people. Well, there's another slide that's missing. Where to go? Crud. Uh-oh. No. I forgot to add a slide. There is one thing. I can actually try to pull it up real quick because I do have it. I had a corrupted file and I had to revise it. Let me see. I don't know where it is. Oh, there it is. Okay. Let me see if I can. I probably can't pull it in, but I can speak to it. So hold on one second. The ARK Venture Fund, which is gone too. Crud. The whole thing got corrupted. Anyway, sorry about that. ARK Venture Fund. I'll share it on Patreon later. The actual details. I don't know how it didn't get included, but I do remember the numbers. They are like 0.3, 0.4% X AI, but they do have 17% SpaceX. All of it, and they do have a lot of other exposure to other AI startups. So that combination all of a sudden between SpaceX, even though their XAI exposure, Twitter exposure is tiny, it's now probably a lot bigger because of this merger. That might change the calculus where the combination of SpaceX within the ARK V fund and XAI and X is now more than 20%. And then it gets interesting. I wouldn't buy an ETF if it's only 7% exposure to what you're looking for. But if it's 20%, then it gets super interesting. So I'll share that data later on Patreon. I don't know how it just skipped here, but yes, it is now. ARK Venture Fund is now interesting for this exposure. And the problem is it might be too expensive now to buy. So bear that in mind too. So thank you for the question. And yes, I still hold Neptune. This is from Fiat Free. Hey, James, is there a BYD versus Tesla face-off somewhere in the pipeline? All the best. Good question. BYD has been on fire lately. This is my old one from 2 years ago. And back then, you can see BYD was strong in rev over market cap, PE, valuations, analyst targets, detailed ratios. It was doing well in some areas, but it didn't have some of the stuff that I was looking for, like bot play, really strong dominant position, energy storage. And there's other key stuff that we need to look at as well. That I do have exposure to a Chinese company called Baba, and that is my Chinese exposure, but it's very small. But let's get back to this, a couple of things, and I will do another face-off. But there is a couple of weird things with BYD that make it a little difficult to analyze from a financial perspective. They have a huge amount, this is from AJ, they have a huge amount of subsidies. So you can see here, subsidies and other income, these are like government subsidies or other debt-free loans or interest-free loans or whatever else, and other non-subsidy income. A huge amount of their income comes from these weird things that we don't quite, they're probably from the Chinese government. I can't follow the dots exactly, and it's not fully transparent, which makes me nervous. Second of all, they are growing fast because they are doing a truckload of hybrid vehicles. Not so many BEV. Like if you look at BEV growth compared to hybrid growth, it's 5x more, 6x. So from that perspective, hybrids are not the future. They're double the complexity, double the service cost, inefficient, illogical. And that's what gives me a little bit of pause too. Also, when you look at the BYD balance sheet, it's a bit of an eye chart, so ignore that. But they have 107 billion in assets, 81 billion in liabilities. And that's pretty heavy for a ratio compared to Tesla. They've got 125 billion in assets and 60 billion. It's like a little over 2-to-1 ratio versus the BYD is another problem. And also, when we speak to people like Jeff Lutz, who's very concerned about where things are with the actual, we have another slide here, with the actual receivables or the payables. Apparently, BYD take over 9 to 10 months to pay their suppliers, which the industry average is 15 to 45 days. They call it 30 days. And that's a big issue too. So that's probably why their liabilities are so high. Their interest on debt too, if they're paying real interest, it would be extremely high. So there are some of the red flags, but I will do another face-off and check it out because BYD on the ATR chart looks great. It is smoking and it's breaking out new all-time highs and has been for a couple of years now. So from that perspective, you can't catch them all. You never know what you're going to get, but this one is looking very, very good. So I will check into that as well. Now, this is yet another question. This is from Just Jay. You being a Tesla expert, I would like to pick your brain on the following. How far do you think Tesla, a lot of Tesla questions, by the way. I want to apologize for that. I know there's a lot of anger in the world, and I know the reasons behind it all. It's not natural, organic anger. It's paid for. So just saying. But this, I don't determine the questions. How far do you think Tesla is from becoming the world's most advanced weapon company in history? I mean, it has self-driving vehicles. How easy would it be to transform the technology into self-driving and self-acting weapons and be able to do warfare without human intervention? Scary question. But yeah, I like the way you think. A couple of things on this one. I do believe, and this is from public statements he has made, his mission is a little bit different. He wants to make the human species, multiplanetary, hence the big focus on SpaceX and Mars. He believes innovation can prevent wars and conflict. If everybody is rich and happy, there's no reason for people to be unhappy. I do fear that in the future, there'll be more of a concentration of wealth among the top percentiles. And those that don't have any wealth will be on universal basic income. And that will make them very angry. We're already seeing signs of that right now out there in the world. Elon is also focused on technology for human progress and the environment, and also infinite abundance too. And he's anti-war and pro-peace. I know you could have self-driving tanks or Optimus robots holding guns, stuff like that, but he is not interested in that. Now, there is a caveat. SpaceX is being used by some military. I know the British Navy have deployed SpaceX. I know the US Navy has it on their aircraft carriers because a friend of mine is on one. And the people on the boat use it to, watch YouTube and stuff, including this channel, believe it or not. Anyway, I don't think his focus is that at all. It's more about sustainable energy, autonomous transport, robots, and abundance for everybody. He does not want his machines killing mankind. That is not the focus, despite what you may read out there. So, and this week in Helping Animals, this is Jim Lee, Eastern Screech Owl, and found on the side of the road after being hit by a car and now non-releasable due to injury and lack of hunting skills. So we're not taking care of this little puppy owl, and owls are magnificent. And tomorrow, DCA will be around live, 7:30, 7:40 a.m. Pacific with the usual team. And I know the markets are kind of flat and not really doing much. And I know it's a tedious time, but that's when we brush up on our skills and just wait. Remember, typically in markets, the top 10 days in any given year is when all the action happens. And then you have 10, 15 days where all the action downwards happens, and the rest is just quiet. So use that time to brush up on your skills. Okay. A lot of impatience out there. People want to get rich quick. That's not how it works. You get rich slow and you get rich smart. Very important. Let's get into the questions. Thank you once again to TND Tesla and Sean Donnelly for being here. Let's take some live questions. And thank you as well to the team who is keeping on top of the questions too. Invest with Doc. Daily updates are gold on Patreon. Thank you so much, Invest with Doc. Andy, keep up the good God's work, James. Thanks, TND, Sean, K8, and the rest of the team. Thank you so much, Andy. Doc Intern, this is an interesting question. British Hodl just put 10% of his bag in Yield Max Income ETF MSTY, getting 5%, approximately 5% monthly. Yield, your thoughts about retiring, flipping 20% of your MicroStrategy Tesla into Misty for steady income and let the rest grow? And how about a retire on video on this approach? Interesting. Let me try have a look at a couple of things. Let me try pull up the chart on that. Sorry, that was the volume. Let me see if I can set this chart, because this will tell us where we are going. Let me pop presenter invite. Haven't done this before, so let me see. Share screen. Window. Entire screen. Oh. Oh crap. I can't access. So I got the security buttoned up on all my machines. I have my browsers locked down so they can only access what I use on this browser, which is Microsoft Edge, which I use for nothing except for this. I'm very big on dedicated browser, designated things. My trading view is logged in on a different platform, and therefore I cannot share the chart. But what I just plugged in here is the MSTY over MSTR chart, and it's down 33% versus MicroStrategy over the last, what's that, approximately a year. All right. So basically what that means is MicroStrategy outperforms MSTY by 30%. That's about 2.5%, 3% per year. If you are getting a return, like a dividend or a yield, I don't know if that's in a tax-free account. If it's not, you got to pay taxes on that return probably. But I will look into that. But I do know that between fees and all that, I know how they make their money with covered calls, etc. And there's many of those types of yield generating covered call type assets. For me, sometimes it's best to hold a bag and stay in a position, hold and wait, let your winners ride before you take profits. But having that monthly income could be crazy. But I will look at the financials and see if it makes sense. I'm very big on pure form. I don't like messing about with leveraged ETFs or these covered call ETFs, because you get eaten alive by fees and taxes too. And when you get the impact of fees and taxes versus the pure form over time is ridiculous. Okay. Somebody's making money. It's like a REIT. There's a whole food chain of people making money off your back. Therefore, they sometimes don't work over time. But I will, it's just kick this person out. Hang on a second. Yeah, good. People come in here and they say toxic things about me. I do this for free. And I am happy to ban everybody. I don't care about subscribers or anything like that. But you don't come in here and poop on my doorstep, okay? And I know there's a lot of derangement out there, and I know the market's down. I know people are upset, but I do this as a service for free. But if you come in here and disrespect me, you're gone. Remember that. If you wonder why people are saying, I don't know what happened, I can no longer see the channel, it's because you've been blocked because you said something nasty to me. Don't do that if you want to keep watching this stuff for free. That's the key. So sorry about that. Dr. Turn, your question was interrupted, and I do read the comments, even when I'm juggling all these other balls too. I will check that out. The misty return versus MicroStrategy, the implication of tax. If it's tax-free, it might actually work. But remember as well, it could turn nasty in the bear market too. That's the other thing. Like the 2x, 3x MicroStrategy funds too, they get hammered in a market downturn. Absolutely hammered. We have people in the community that got into those positions at the top, and they literally lost everything. They saw their entire portfolio go to zero. If you just held MicroStrategy, you would have had 2/3 left instead of getting completely blasted. So that's kind of my theory on those things. I will look into it more, and shout out to British Hodl too, because he may be onto something, but at the same time, it depends on your tax situation too. So we'll see. Duck intern again. Last week was 1,000 days since I first saw one of your MicroStrategy videos. And the next year I joined Patreon. Your channel and Patreon have been completely life-changing for me, my friends and family. Woo! Good job. Thank you so much, Doc Intern. You're amazing. Appreciate that. Vincent Jones, grateful. I'm grateful for you too. Rowan Bailey, similar to the first question today, in the UK, I have retire on cocktail filled, but I do not have my own castle yet. I'm renting. I'm 45. Should I still buy a castle or look to accumulate Tesla, NFA? I'm going to answer this very harshly. I've been looking at some of the crazy things happening across Europe, and I think you should keep investing and think about, if you can, making a long-term plan to retire somewhere cheaper, safer. Like everybody I know in the UK has gone. They're in Dubai, they're in Portugal, they're in Singapore, they're in Hong Kong. They've gone. If you have substantial money, it may make sense to think about another domicile for you. That's better, cheaper, safer, etc. So think about that. We are working on a new product, which will be a Retire on Compendium, which will help you plug in all the things you're looking for in life, how much you have, and it'll kick out where you can go. So that will be key for you. But just think, security first, safety, think taxes, think cost of living, and wind those all in. It doesn't make sense to buy a castle in the UK. I don't know. I know markets, some markets have not done very well in the UK for real estate. And if you have a good deal for rent, I don't know if they have rent control in the UK. If you do, that could be amazing if you got a sweet deal on rent compared to high interest rates. And you can't, the other thing I don't like about real estate in the UK is you can't lock in long-term low rates on a mortgage. They're variable over, I think, 2 or 3 years, or maybe maximum 5 years. That also kind of scares me a bit. I don't know if that's changed. They used to be the way. Maybe I'll do a quick global real estate update as well soon. But yeah, I think the next 3 to 5 years will be very, very, very transformational. It might be the last major transformation mankind has. Okay, this is the AI revolution I've been talking about since 2022. Be on that train. And then if you can hold out on buying a castle for now and stay invested, unless you have oodles of cash, if you have literally enough to retire on 10 times over, take 1/10 of that, buy a castle. Everybody needs a castle. But at the same time, the opportunity cost of that to buy a property is huge. And check my Patreon post from the other day. You'll see exactly how huge that is. With the Netflix trade, very, very, very bizarre and very eye-opening too. I think it's in one of those key rules too. So bear that in mind. And Rowan, out there in the UK, think about that. Think about pausing your purchase, staying on this revolution for now, then take profits, then think about where you want to buy. And security first, taxes, stuff like that. I see every regime change. I mean, I see California here changing in a very, how do I say, uncomfortable way with that getting political. There's things I don't like that I see happening everywhere, and it makes me very sad. Anyway, happy feet. If you had to sell some Bitcoin or Solana to pay for taxes, which one would you pick? I do believe at this stage, like for the longest time, my Solana and Bitcoin position were kind of in lockstep. Now one is 30% higher than the other because Solana, I do believe, is very oversold. When the ETF comes this year, I do believe it'll catch up and exceed the performance of Bitcoin. I could be wrong, but my models tell me just like determining when Tesla is extremely oversold, Solana is extremely oversold. Solana does 70% of what happens in crypto. 70%. One chain, and it trades at less than a quarter of the value of Ethereum. And it does 10 times more than Ethereum, and it makes 3 times more money than Ethereum. So that's just put that in your pipe and smoke it. I would take a little bit off of Bitcoin. Hold on to the Solana at this level. Now, if Solana goes to 225 and Bitcoin stays around 85K, 90K, then the calculus changes. So bear that in mind too. And thank you as well for your super sticker. Martello45, Max Grease, Sylvan Muster, Dog1, Do Travel, Signal 103, AR Ron, DBF 430, The Great Escape. One other thing as well. And Alex Rogan out there in Australia, happy feet. One other point. Remember this with Bitcoin. The reason I'm in Bitcoin is maybe one day supply crunch happens. If the US goes out and really starts implementing their plan to buy 1 million Bitcoin over the next 5 years, building that SPR, game theory will kick in like we've never seen before, and Bitcoin will go to the moon. That's when you have your price targets of 250,000 for Bitcoin actually becoming a reality. Is that going to happen? I don't know. If it does, that's why I'm holding. I'm holding in case it does happen, because that's possible. And then things will be fantastic for everybody. So that's why you kind of think about investing is allocations matter, so important. And then you have multiple fishing poles in different ponds because you don't know what you're going to catch. Maybe there's a big tofu whale in one of these ponds. I don't know. But that's what you need to think about. And allocations, I don't know, happy feet, what your Bitcoin Solana allocation is, but I like to keep them equal. But right now, my Solana allocation is much lower than my Bitcoin one, but my MicroStrategy is much higher than my Bitcoin. So it's due to crazy returns. My whole portfolio allocations have been completely skewed, but I'm trying to bring them back into a comfortable risk management range for myself. So I advise do the same. So we'll see. Either way, one thing I can guarantee you, the next 3 years will be fascinating. Thanks all for coming. Thank you, Sean Donnelly, K8, TND Tesla, Mr. Keyframes and Humps, and everybody out there. And sorry if I shared a little bit too much unvarnished truth, but that's me. No filter. Have a good night. Bye-bye.